in fact. So bring you more on that as soon as we get it. In the meantime, here's Joe with all the business news. Hi,
Thank
Joe.
you very much, Ben. Yes, in the business news this evening, the pharmaceutical giant Pfizer is to shut its R&D plant in Kent. Most of the 2,400 highly skilled workers look set to lose their jobs. BP said it made an annual loss of £3.1 billion, but it says it will restart paying dividends. And EMI's main creditor bank, Citigroup, has seized control of the record company and aims to sell it. Now, the drugs giant Pfizer has confirmed it will close its research and development site at Sandwich in Kent by the end of next year. 2,400 staff are currently employed there, and Pfizer says most of the workers will be made redundant, though several hundred jobs would be transferred to other UK sites and partner organisations. The Business Secretary Vince Cable said it was extremely disappointing, but the decision was not a judgment on the UK as a location for pharmaceutical research. Simon King is a pharmaceutical expert with Data Monitor.
I don't think this is anything to do with the UK. I think this is to do with the industry facing a period of fundamental change, necessary strategic kind of transformation, and we've actually seen that Pfizer has been undertaking these cuts for the last 4 or 5 years, initially starting with salespeople, but increasingly moving towards R&D, and the company itself is very much tailoring the diseases it's focusing on now, and I think that's falling in line with today's announcement, basically.
And the volatile political situation in Egypt is continuing to take its toll on the economy. Standard & Poor's has become the second major credit agency in as many days to downgrade its rating on Egypt following a week of violent protests. The stock market will remain closed there for the third day in a row, and banks will also remain shut. Some crash points around the country have run out of money. There's concern about how the unrest will affect inward investment into Egypt and also Egypt's thriving tourism industry. More than 12 million tourists visited Egypt last year. Earlier I spoke to Amanda Forsyth from the fund managers Charlotte Square, explained though the situation had become for travel firms.
Who'd be a tour operator right now? You've got an oil price going through the roof. You've got civil unrest in some key holiday destinations like Tunisia and now Egypt. And of course, against all this, you've got a consumer that's very uncertain. Now, of course, we've been hearing that in Egypt, it's really very much focused towards the big cities. That's not the Red Sea where most of the tourists go to. But with analysts downgrading their forecast for the Tunisian impact today, it's really an area of huge uncertainty, and uncertainty is just what the city doesn't like.
Now, BP has announced it made an annual loss of £3.1 billion last year, although the business itself made a healthy underlying profit that was wiped out by huge costs relating to the Gulf of Mexico oil spill, for which the company has set aside almost £25 billion. BP is selling 2 US oil refineries, including the Texas City refinery, where 15 workers were killed and 170 injured in an explosion at the plant in 2005. At the same time, it's expanding its links with Russia.
I think what they're really doing is focusing on upstream exploration and development areas, and the businesses they're selling in the States are older, less profitable refinery operations, and that's a real focus from BP's point of view in saying that their expertise in the future lies in finding difficult to reach oil rather than necessarily in turning it into the goods we use every day.
Now, the banking behemoth Citigroup has seized control of EMI after the record company proved unable to pay its debts. EMI, which was owned by the private equity group Terra Firma, owes the American bank over £3 billion and was incapable of meeting its latest repayment on time. EMI, whose artists include Coldplay and Tiny Tempa, will now be put up for sale by Citigroup, with other private equity groups rumoured to be interested, including X Factor boss Simon Cowell. Well, I'm joined now by Chris Cook from CMU Daily. You know a little bit about this. First of all, let's deal with the situation from a day-to-day running of the company. We're not going to notice much of a difference, though, are we, now that EMI is going to be put up for sale?
Not immediately, no. And indeed, the statement that came out from EMI and Citigroup today, that was very much what they wanted to get over, that for the time being, it is business as usual. And indeed, Citigroup didn't put any indication that a sale was going to happen, as we all expect it will, or any sort of timeline on that. So I think, yes, for the next few weeks, certainly, it will be pretty much business as was last week.
quite a few artists didn't really like the terra firma regime run by a guy called Guy Hands. We had, public pronouncements from Coldplay and Robbie Williams. What'll happen now, do you think, now that they're being passed on to someone else?
I mean, I think EMI, when terra firma first came in and made some bold statements and got rid of quite a few senior executives and really record companies, the relationships aren't between the company and the artist, they're between individuals at the company and the artist. And so as they went, relationships were damaged. A lot of that has been repaired in the last couple of years, even with terra firma still in charge. They had various changes at the top over a couple of years, but last year put a guy called Roger Faxon, who was a long-time EMI executive, in charge of the whole group. He's quite popular within the industry. So I think many of those relationships had already been repaired. Those artists and their managers will now be looking, well, what is the future? Is it Roger Faxon in charge of a standalone EMI, or is someone going to come in and buy this company and possibly split it up?
Yeah, here's the interesting, who would actually want to buy this? I presume Citibank want to get rid of it straight away, given the fact that they have had to write down billions on this event. They loaned the money to terra firma back in 2007. It has proven to be a pretty awful investment.
And to be fair, Guy Hands is probably the first to admit that.
And yet Guy Hands is one of the names that's linked in a separate way to buy the company.
It is. I mean, the two companies most likely should Citigroup put it up for sale, two companies most likely to bid, Warner Music, a similar-sized music company, long been rumoured as a potential merger partner for EMI. They are known to still be interested. Whether they can raise the money is another matter entirely. We know that Goldman Sachs are in there looking, could they sell off this to buy bits of EMI.
Simon Cowell, I mentioned.
You did. That was one of the two more outlandish rumours that came across at the start of the week was, as you mentioned, Guy Hands even buying it out. Yes, Simon Cowell's Psycho division, which actually is a division of Sony Music. I think that's probably a celebrity angle to this story, but who knows?
Chris Cook from CMU Daily, thank you very much for joining us. Yes. Now, there have been a slew of important reports about the health or otherwise of the UK economy today. On the upside, British manufacturing is growing at its fastest pace in nearly 2 decades. On the downside, though, the number of mortgages approved has dipped notably, and there's been a warning from the respected think tank that the Chancellor should delay some of his planned spending cuts to support Britain's stuttering economy. Well, joining me now from the British Chambers of Commerce is Steve Hughes. Steve, thanks for joining us. What do you make of the the good news and the bad news we got today?
Ultimately, the manufacturing figures are very positive. They're at a record high and really confirm what the GDP figures showed us last week, which is the manufacturing industry is driving the British economy at the minute, whereas the service sector is struggling a little bit more. Now, there are elements of the housing market which are struggling as well, and that relates to issues surrounding mortgage finance and the availability and supply and demand of housing. But fundamentally, the economy is fragile at the moment, despite the strong manufacturing growth, which showed that there was a number of growth areas for exporters selling their products in foreign markets. There was also the issue within those figures of rising input costs for manufacturers. Now, this only complicates the issue for the Bank of England setting interest rates.
Aren't we seeing what could be described as the desired rebalancing of the economy, in the sense that manufacturing is doing very, very well, they wanted that, and dependent on consumption and borrowing is waning a little bit. So in many ways, we're getting exactly what we wanted, although it's painful.
Well, it's certainly painful, but you are right in the sense that rebalancing should focus on the productive areas of the economy, and we need to export more and invest more to generate sustainable economic growth. And that means selling more of our products to people who want to buy them abroad. Now, rebalancing within itself is a difficult question. Manufacturing has, over the last 3 decades, evolved into a very different industry to what it was in the early 80s. It's now very much focused on advanced manufacturing, engineering, life sciences, pharmaceuticals, those kind of industries. And creating the conditions for growth in those industries is crucially what policymakers need to do.
Steve, what did you make of the comments from the National Institute of Economic and Social Research when they said that the Chancellor should delay some of the austerity measures that he had planned for this year because the economy is just as fragile as you were just saying?
Well, despite the fragility, 2011 is obviously going to be a very difficult year. You have the impact of the austerity measures yet to be realised. We've just had a VAT increase as well. We've got difficulties within our main trading partners within the Eurozone. However, the Chancellor has adopted a fiscal or deficit reduction plan which is ultimately supported by business. Deal with it early, deal with it quickly. That supports private sector investment and supports growth.
That's Steve Hughes there from the British Chambers of Commerce. Then let me have a quick look at the markets, which closed in the UK at least at 4:30. As you can see, the FTSE had a really good day, up 1.6%. They really do like those manufacturing numbers that we got today. Manufacturing rising at its fastest clip since 1992 when those records began. The Dow likes some numbers as well from Pfizer. Look at Pfizer, up 6%, the pharmaceutical giant, closing plants here in the UK, but buying $5 billion worth of shares back, which of course the shareholders like. And BP up 1.3%. That's because they're going to start paying dividends again. So a good day in terms of shares for BP and Pfizer, despite the impact across other sectors. And that's roughly the business news for now.
Joe, thanks very much.